Hello everybody, welcome back. It is my second favorite series that I do on the channel, and it's of course the portfolio reviews that have been coming in hot recently. Thank you to all of you guys that have submitted your portfolios to me, whether over on Twitter at Ryan Dengler Show or on the Discord link in the description. It's truly been a humbling and honor to go over all your portfolios and share my honest, transparent, unfiltered thoughts. This is a series that I do primarily to not only promote transparency, something that is lacking in the finance community, but also open our eyes as investors to different strategies, stocks, styles, and so much more. So today I'll be going over Josh's portfolio that he sent over to me on Twitter. If you like this series, let me know in the comments section and like and subscribe. Thank you, and on to the video.
Hello, I like money.
So unfortunately, he didn't share any of his details with me when it comes to like age, objectives, all that good stuff, which is pretty important to know. I typically like to know that, but unfortunately I did not get that information. But to start off, currently his first holding is AbbVie, stock ticker ABBV, which is the pharma giant. And currently he is up 22.69 percent on the stock. I think AbbVie is a really strong business, but my one thing with AbbVie that I'm personally concerned about in my own portfolio, yes, it's free cash flows, it's execution, that does not lie. It's absolutely flawless, especially for a pharma company. But circle of competency is a real thing that I believe in when I'm buying a business, and with AbbVie, that's one of the hardest things to get. Such a hard business to understand. I don't have all the time to be researching the pipelines, drug developments, and all that other stuff. And that's something that's held me back from buying into another behemoth of a company called United Healthcare, stock ticker UNH. Giant business, great cash flows, and all that other stuff, but there's so many things that I don't understand that could possibly go wrong. It's really kind of changed my philosophy when looking at a bunch of different stocks. I kind of learned my lesson when it came to 3M with that. There's so many moving parts in the business. But with AbbVie, cash flows, execution, and leadership do not lie. I like AbbVie as a company to offer some solid dividend yield and dividend growth, and I think they've done well going past Humira, and that's something a lot of investors were fearful of, and they're being rewarded trading at all-time highs now because of it. Next we have Amazon, and I've recently talked a lot about Amazon on the channel, and currently Amazon makes up his second largest position, and he is up 16.61% on it. I think Amazon's a really strong company. You can't really go wrong there. Then is his third largest holding. He has SPY, which of course you can't go wrong there either. SPY is what I think most investors should honestly be doing. Obviously, Nvidia has completely carried SPY for the last couple of months, but I still think over the long term it will do just fine. I think that's the best way for most people to go around it. I think it's honestly pretty funny that most Americans that don't know anything about investing, that just invest in SPY or VU, do better than most of these finance gurus who trade in and out of stocks on YouTube. Honestly, kind of funny. But his fourth largest holding is Visa, stock ticker V, and if you guys know me on the channel, my philosophy is Visa, Venti, Vici. That's the cult here. But Visa, in my opinion, is a top 3 business in the entire world right now. Such a strong business, very easy business to understand. No, they do not make money off of credit card fees. They're essentially a payment processing network. They're the middlemen in any transaction through the Visa system. There's 2 systems that many people use, Visa and MasterCard, and Visa currently has the larger market share. But Visa is an awesome company, and an even more awesome company to have as a core holding, and it's one of the largest gainers in his portfolio, up 27.6%. I like this one a lot. Next, we have a stock that's been falling a lot recently, which is Google, stock ticker GOOG. In my opinion, Google owns the strongest entertainment platform on the entire world, which is YouTube, and it's not going anywhere anytime soon. Google's an awesome business. They print free cash flow. I'm currently looking at Google and potentially adding it to my portfolio sometime soon if it continues falling like this. Like now could be a potential good long-term opportunity. Once again, though, AI is something that I don't really want to be investing in, long-term. It's kind of out of my circle of competency as well. I do have some quote-unquote AI holdings that I didn't buy for the AI, like Microsoft. Both Google, I would want to be buying its cloud assets and the other assets that it had before their little AI run-up here. Next he is SoFi. Shout out SoFi boy Magerspeed here, but me personally, I don't love SoFi. It definitely has much more upside to a lot of the holdings that I have right now, but it also has a lot more downside in my opinion. I also would have to do a lot more research. I've never just got around to buying it. So for now, I'm not going to be buying SoFi, but I think it's going to be interesting to see what happens over the long term with them. This is definitely a different play from most of the other holdings so far in the portfolio that we've seen, and I honestly think that could be a good thing. I think it's good to add some risk and speculation and high growth options, especially considering that he's on the younger side. Next we have Caterpillar, stock ticker CAT. Caterpillar is an absolute compounder. This stock has been performing insane as of recently, and I regret not buying when it was down a few years ago. I'd like to see him potentially consider building out this position. It's an absolute behemoth, but at the right price. He's currently up 32.62%, so of course it has to be at the right price here. That cost per share is really solid on it. Next, he owns Texas Instruments, which is going through a bit of a weird time in their business right now, a bit of more of a rebuilding phase. They're spending a lot more money on capital expenditures, and in the short to medium term, that's going to lead to some slower dividend growth for my dividend-focused investors on the channel. I think long term, this will probably be a fine holding. Speaking of a company that long term I think will be just fine, next we have the trash company Waste Management, which recently just announced a really healthy dividend hike. It's absolutely crazy to see Waste Management trade it where they've been trading as of recently. If you look at the chart, it legit looks like Costco. It's absolutely wild. But Waste Management right now, I think it's an awesome company. There's obviously going to be sustainable limited growth ahead of it. It's not going to have crazy compounding like growth, but I think it's being a little overpriced by the market right now. I was buying at $160, $170, that range. If it were to go back to like 180, 170, I'd probably buy more then. But unfortunately, it doesn't appear that I will get that dip anytime soon as it's just continued to go up. So Waste Management, I just can't justify paying at all-time highs and a premium like this for the limited growth that it has as a trash company. Don't get me wrong, it's still an awesome company. It provides safe, sustainable growth over the long term, but still, paying that premium, you're not going to get an amazing return if they continue the current free cash flows that they have. Next, he owns Bank of America, and currently he's up 20.43% on his Bank of America position. Me personally, I'm not the biggest fan of banks. I just never really got into it from an investor's perspective, but I think over the long term, you'll do just fine with that. Next, he owns Moody's Corporation, stock ticker MCO. I'm really bullish on financial companies over the long term, and I definitely like this holding. It's actually one of the only red positions in his portfolio, so I would consider potentially maybe adding more. I'm in S&P Global right now, and the big reason for that over Moody's, I think overall their business is like more diversified, and also I think that S&P Global is really ramping up the potential growth long term of their business with all the acquisitions that they've had as of recently. Yes, they're going to have some slower dividend growth in the short to medium term. We recently just saw they only increased at 1.1%, which is essentially like taking a pay cut. But I think that S&P Global over the long term will absolutely just continue to compound and be a very quality company and offer some really, really nice growth for me. And lastly, I give the portfolio a 10 out of 10 because it has Starbucks in it. Stock ticker SBUX is his smallest position, and I think right now could be a potential solid time to add up and load on. Currently, he is up 2.39% on his Starbucks holding. I think Starbucks right now, for somebody who's never bought in, whose cost per share is near these prices, I think it's at solid price, I think long term. Me personally, my cost per share is a bit lower from where it's at right now, so I'm waiting till below $90 to continue buying more at this moment. But it's actually traded below $91 today, and it looks like I could be buying some more Starbucks soon. I hope it continues falling. They recently announced today to be laying off some workers in the Middle East due to everything that's going on there, which is unfortunate for the workers, but I think from a business perspective, it will be the right move. A lot of people are making false narratives about Starbucks due to some of the claims that unions are making, which is absolutely wild. I have an entire playlist on Starbucks stock on my channel. If you guys haven't already checked it out, listen to me ramble about Starbucks for about 5 hours. It's a really good time. But I think Starbucks could be at an appealing value right now long term, and it's trading near 52-week lows. Overall, I think the portfolio is really solid. If there's any outliers, I'd maybe say Bank of America and SoFi, but I really like the amount of holdings in it. I feel like you have a really solid balance of that, and it's honestly a really solid portfolio. Thank you for submitting it in. Once again, if you guys want to submit your portfolio in, do it to me on Twitter at Ryan Dengler Show, or do it on the Discord, join the link in the description, and direct message me from there. I want to thank you all for making it to the video. If you like this type of content, let me know in the comment section, smash the like button for me, subscribe, check out the Do Dividend Stocks Not Drugs merchandise, the best looking merchandise for any dividend investor. Thank you all, have a good day, and Do Dividend Stocks Not Drugs, have a good one.